Well, hello, traders and investors. My name is Roger Scott, and I'm the senior strategist at WealthPress. Today is the 1st of March. I actually forgot to set my watch. It's on a regular calendar, and it's telling me it's the 29th today, but it's not a leap year. And by the way, I want to congratulate Jeff Zananeri. He has a leap year birthday. It's actually today, if it was the 29th, but he celebrates it on the 28th. So happy birthday, Jeff Zananeri. All the best wishes to you. And he's another WealthPress trading analyst and a strategist just like myself. So now let's get into today's morning activities. Now, what do we expect for the week ahead? We've got construction spending, we've got ISM manufacturing index, we've got PMI manufacturing, we've got a lot of manufacturing and construction data this week. We've got the IMS service index. We're going to have a good idea of where manufacturing and construction is before the end of this week. We've also got productivity. We've also got factory orders. We got international trade in goods. That's going to give us a really good idea if industrial, basic materials, construction, if they're still moving forward at the same pace they were beginning of the last few months when they really picked up. I know home sales have been at a 14, 15-year high, so this will be very interesting, especially in light of how other countries are recovering from COVID and how the job market is moving forward or not, and how supplies are coming across, and how we're moving across with international trade equity and so forth. Anyway, we're going to get a good idea of that. The biggest reports this week is going to be the international trade in goods and services and employment situation. Also, jobless claims. Although jobless claims last week were very, very good, they were now moving into the 700,000 area. As you can see here, we're again looking for 790,000. I'm hoping. Fingers crossed, toes crossed that we're going to be below 750, 730. We need this number to move lower. If we're not moving lower, it's telling us, remember, this is a weekly report. It's telling us that there's too many people unemployed. And if there's too many people unemployed, it's going to impact the GDP, which is the measure of how much U.S. has grown each quarter. So again, keep your eye on the manufacturing data. Keep your eye on the manufacturing construction stocks. I'll keep you updated as the week progresses. But again, ISM manufacturing is the big one today. Petroleum status report. We know there's just so much energy and so much oil out there. The surplus is crazy. Jobless claims, big one on Thursday, and on Friday, employment and international trade, goods and services. I'm really looking to see how international trade in goods and services does with the ISM manufacturing construction spending. These two are going to put a good piece of the puzzle. I think between productivity and costs, international trade in goods and services, and ISM manufacturing construction, we'll have a really good, clear picture if whether manufacturing and construction around the globe and in U.S., because things are being imported here more, is having a impact on the U.S. or if it's slowing down. Now, bond market. Look at this. The bond market. Now, remember, the bond market and interest rates trade inverse to each other. I don't want to get into a long explanation of why and how, but they do, because remember, when somebody buys a bond, they get a fixed $1,000 par payment at the end of the term. So if somebody buys a 20-year bond, and if interest rates are higher, right, than they were when I bought the bond, that means the older bonds are going to go down. So remember, it's fixed par. So higher interest, lower value of the bond. Lower interest, higher value of the bond. The interest rate and the bond value always have to adjust back and forth, so that so at the end of the term. Sorry, it's been a while since I did Economics 101. So at the end of the term, that $1,000 par value that you get, the actual amount that you're borrowing, is given back to you plus interest. But again, it has to be adjusted. And if interest rate is going up, then the older bonds are going to go for lower value because people can get higher interest on the new bonds. And that's what's been going on. Bond values has been going down because long-term bond values have been going down, even though short-term bonds have been held steady, because interest rates have been going higher in the long term. And unless the U.S., let's just put it this way, we are entering a period where we're more than likely going to have inflation. Unless the economy can grow at a fast enough clip, there's going to be inflation. Basically, it's going to cost you more to buy stuff than it does right now, unless the U.S. dollar can appreciate or the U.S. can print more money. But right now, and they do that with, buying back bonds and all that stuff. But I don't think that's going to happen right now. So be prepared for inflation. The lower the T-bond goes down, the higher the potential for inflation remains in the short term. Again, now this is bouncing up, but I'm not seeing it overbounce too much. I think we're going to bounce a little more maybe. We're already right now down 1.57 at one. We're right here, even though we went all the way to 143. We're right now at 140.40, and I think we're just going to hover around this level. And the only reason this would go higher if the U.S. stock market started cooling off substantially. Not sure that's going to happen. Let's talk about global economy real quick, and then I'll give you guys my top stocks. So global stocks, they rose Monday, lifted by Joe Biden's stimulus package that will be enacted by bargain hunting after. Let me start this off. There's two parts here. Markets have sold off, and Joe Biden has promised the stimulus package. Markets are looking higher right now, as you could see here. 316 points on the Dow, 150 points on the S&P. Everything is higher substantially because markets have sold off last few days and because Biden is promising the stimulus, although it's got to go into the Senate. Now, Hong Kong advanced despite survey showing slightly weak manufacturing indicators for the month of February. That's something we have to keep an eye on and make sure it's not caused by more COVID infections. The government reported that exports rose almost 10%, 9.5% in February from a year earlier, and imports jumped nearly 4%. That is a sign that this is Korea. I'm jumping from Hong Kong to Korea. But remember, Korea is very important in our manufacturing and our import and export process. Think about Hyundai, Genesis, the car that Tiger Woods fell off the cliff. I'm not going to get into that. Manufacturing survey for Japan showed expansion in February for the first time since April 2019. I'm still back on South Korea. The Purchasing Managers Index reading of 51.4, where 50 or more shows expansion. This was a sharp improvement from the 49.8 registered in January. I'm very happy about that. So it looks like South Korea is making its headway, and it looks like Hong Kong is doing okay. Asian export resilient and reliant economies are counting on a healthy American economy to boost trade. Those are a lot of the reports we're seeing this week. As you can see here, manufacturing, international trades and goods and services. Remember, I told you this week is going to be very important for this. Worries about the economy as well as COVID-19 are still relatively widespread in Japan, although they are cooling off in the U.S. So let me go back here. Asia's export-reliant economies are counting on healthy American economy to boost trade because it can't be one way, which has tended to stagnate during the pandemic. As the region's recovery begins to take off, vaccine rollouts are also gradually getting started in most Asian nations. Thank God for small favors. U.S. House of Representatives approved Biden's $1.9 trillion pandemic relief on Friday, and it now goes to Senate. Let's hope it gets approved. And then these gains that we're seeing in the stock market could hopefully continue moving. The bill infuses cash across the struggling economy for individuals, businesses, schools, states, and cities. U.S. stimulus bill would include yet another round of one-time payment to most Americans. And that's the biggest reasons why we're seeing this market higher. Now, if we were to look at the overall futures market, just to kind of get a glimpse of where it's at, you would see, I want to see how far it's above the 50-day moving average. You will see here that we are now trading above the 50-day moving average. I'd like to see us close above the 50-day moving average today and tomorrow before I give it a full-on bull opinion. I'd like to see us either above or below the 50-day moving average for 2 days straight. As you can see here on the NASDAQ, we're not there yet. We're going to open higher, but we're not there yet. If you look at the Russell, we haven't even hit the 50-day moving average. We're still bullish. So I'm still very bullish on the Russell. Let's look at the Dow. The Dow should have been impacted, but look at that, above the 50-day moving average, and this is above the 50-day moving average. So let's keep our eye on the Dow. But if things stay this way, then we should have a bullish NASDAQ back before the end of the week. I want to see 2 days where the NASDAQ is completely above the 50-day moving average, like this, where no part of the low trades or touches the 50-day moving average. And it looks like on the SPY, we're going to get there a little earlier, But again, if this is above, we need one more day on the NASDAQ. We need 2 more days on the Russell. We're good to go. Now, let me show you 2 stocks I'm looking at. One is a small cap. One is a fairly large cap. This is Generic Holdings, GNRC. It's made a swing high. It's a multi period, probably an all-time high. And it cooled off for a few days. Now it's coming back, never touched the 50-day moving average. And what I like about this stock is they do backup power generators. Backup. It's a mid-cap stock, so it's got a lot to go. Look at the 5-year return, 844%, 1-year return, 197%. They make generators, backup powers. Very, very, very useful right now. As people are starting to get away from the COVID, going back to the at-home environment, they need generators. They need a way to get backup because a lot of people are starting to work from home full time. That's why the real estate in Florida has been going up so much. But again, backup generators are very important when the economy is moving through a unknown stage. Between a stay-at-home period and going back to the world period, a lot of people are buying generators. We've just had a huge winter in Texas. The world, the U.S. the U.S. weather is all over the place. But again, these generators are becoming lighter, more usable, more sustainable, and they work for residential, light commercial work, and industrial. And folks, industrial economy is picking up. I like this stock, Generic Holding, and I like the price right around the 341 level, and I would put a stop loss right here at the 303 level. Nice and tight, and if it breaks this low, you're out. The next stock is an interesting one. This stock, I'm bullish because I think U.S. is starting to get out a little bit. People are starting to go out. What does RCI Hospitality hold? Nudity. Nudity, that's right. Operates adult nightclubs that offer live adult entertainment. Look, the truth is, porn, adult nightclubs, they were invented before the economy was invented. I mean, we've been having nudie clubs for a long time. Look at this, 1-year return, 157%. It's a Russell 2000 stock. It's a leisure recreation stock. I was showing people the NASDAQ 100. I want to show you this. This is the NASDAQ 100. And I want to show you the kind of stocks that are popping up right now. You got to see this. Look at this. I was telling my guys this last week. Look at this. You've got Expedia, Marriott, Trip, Alta. What do all of these stocks have in common? They're all looking forward to people going out. They all make money when people socialize, when they go out, when they travel, when they do stuff, not when they stay at home. And RIX is not going to make money when people are staying home. It's going to make money when people are out and about. COVID vaccines are coming out. Men have not been entertained, wink, wink, for a long time. It's based in Texas. Texas has been really taking it under the chin. I have a good feeling that people are going to start going out soon. And when they do, RIX is going to be it's going to be a very visited place. Let's just say that. And I know it's kind of funny for me to talk about this, but folks, there's money in every kind of industry. And RCI Hospitality is definitely the place to be for investors. And again, I would be buying near this high level. Let's see where the price is. Look at that, all-time highs. People are definitely ready to go out and go to nudie bars. All-time high, I would be buying right around the 68 level, and I would put a stop loss at the 55 level, and I think this stock has a couple of good quarters ahead of us. If you look at earnings estimates, let's take a look. Look at the price target is not very high. It's already above the price target. But if you look at surprises, it's had 2 positive quarters of earnings surprises. Not estimates. Estimates were lower, but the stock is still moving higher, and the stock is on a roll right now. And all of these going out places, I don't know if you want to call RIX going out places, but hey, it is what it is. It's making money. So again, GNRC and RIC, R-I-C-K. Now, one is a large cap, one is a mid cap, and one is a small cap. But I really do like these 2 stocks. Now, folks, before I let you go, I recently clocked out of a 53% return on investment trade in under 24 hours. But now I'm hunting much bigger games. That's right. I'm not talking about 100% or even 1,000%, but a chance to grab gains like 3,833% on some of the world's smallest stocks. That's right. This is like buying a Fortune 500 company while it's still trading as a small cap stock. Remember Amazon 15, 20 years ago? Remember Netflix 10 years ago? That's what I'm talking about. Remember Zoom 3 years ago? That's what I'm talking about. In other words, it's an opportunity few investors ever get. But you're about to get yours. Click on the link below and find out how. And make sure to like this video, subscribe to this channel if you're watching on YouTube, stay ahead of the market by being the first to be notified when we post new videos. And have a great day. And don't forget about Rick. Those nudie bars are going to take off. And GNRC. Again, we got the backup power. And remember, if power at Rick's goes out, they're going to be forced to use something like a Generac Holdings generator. So again, people are starting to go out, generators, hospitality, nudie bars, restaurants, travel. It's starting to come around. So don't miss out on it, and I'll talk to you tomorrow and have a great day. Bye, everyone.